Hey everybody, this is Jim at SP500chart.com. It's 5 o'clock on Wednesday afternoon, September 4th, 2013. My voice is going on me again, so I'm going to try to make this succinct. But I have to tell you this to start with, and that is the website and the video are for educational purposes only. Nothing stated at the site or in the video is intended to be used as investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own research and make investment decisions that are suitable for your personal financial situation. I am not a licensed financial professional, just a guy who draws lines on charts. Okay, we came in to today looking at two lines that appeared to be fairly important. We had this longer term teal line that goes all the way back to middle of November 2012 and also touches on a bottom from June of this year. We also had this orange line that is pretty obvious. It is the last two tops that line up. Now what's interesting is today we got over this line, and that should set up a move that would reverse this downward trend, and I think it could very well lead to a move up into the 1690s. But I want to show you one thing that you need to be aware of. We've got to get higher than where we ended today, obviously, or we're not going to make the 1690s. I mean, that goes without saying. But I want to show you, and let me see, I'm going to give you a second to look at this chart and see if you can guess what I'm getting ready to say. Time's up. We reached a high today of just a little bit over 1655. That is over this what we had as a proposed neckline at one point, in what looked like it might hold on a second, let me go back. Back when we had this, what looked to be an inverted head and shoulders pattern right here that never got a right shoulder, we made it back over that trend line, for what that's worth. The other thing, though, that I want you to see, and it's most easily seen on a 10-minute chart, is that the brakes were put on today almost exactly at gap resistance. So to remind you, gap resistance is where people who woke up on the morning of the 27th to a gap down when the S&P was trading at roughly 1658 the day before, they're looking at this and they're going, gee, you know, if we could just get back to the mid-1650s again, I think rather than selling for a loss down here, I think I'm going to wait for a rally back to about where I woke up to bad news. So that may be why we've saw this resistance today just a hair over 1655. Additionally, for what it's worth, we've got a few highs that sort of line up here. Well, actually, they line up quite well. Here, here, and here. So the question becomes, and this is really one of interpretation, and I don't feel necessarily qualified to tell you exactly what the proper interpretation is. But we've got a longer term line here that has just broken out here, but then we've got a short term line that we just drew that could act as resistance. So maybe what this means is that we are perhaps going to back up a little bit, maybe come back and back test this orange line before this move can take place. But I do think a back test to the low 1690s, I think that just seems to be something that the market should be willing to do. And the first evidence we have of this, even though it's not a technically significant margin, the first evidence we have is getting over this orange line right here. So coming into tomorrow, let's still keep everything on the chart right where it is. Let's see what happens. See if the S&P has the strength to get over about 1657, because there's two reasons why 1657 might take a little while. First one is gap resistance, and the second one is this little trend line right here. But if we get up over that, I think we pretty quickly should be getting up into the 1670s. So guys, I think I really do. I think it's that simple. We can we can take a look back at this chart, and you can see where we are. Here's that teal line that I was talking about, and you can see that that line started back in November, had that low in June, and now it looks like this may be creating a bounce, and we're over this little orange line up here, which I take at this point as a good sign if you're a bull. It is not a technically significant margin yet. We're only about, what, six points maybe? About 1/3 of a percent, or a little bit more than 1/3 of a percent over this line. You want to see 1%. So obviously I would feel a lot better about this if we got up to the 1660s tomorrow, while this line it would be in the 1640s. That would be a percent over that line, which I would take as a more technically significant move. So let's see what tomorrow brings. Again, if you're a bull, this is a good sign, but it's not a final thing because of that small margin that we are over this line. But the willingness for the S&P to do that, I think that's a good thing if you're a bull. So where we stand right now, this line now has been turned into what I would think would be weak support. With that very, very small breakout, this still should be support down here. But if it gives, we know what to expect. Low 1600s or even high 1590s before we find what should be support. If we start to run up, then we've got resistance. The next bout with resistance should be in the low 1690s. So good sign for today. Let's see if we get follow through tomorrow. My voice held up just long enough. Thanks for watching. Thanks for your support.